All right, Demelza. Really looking forward to meeting you and talking to you. I'm making you the presenter now, so you'll see a drop-down menu for us to hear your voice. And I'm not sure if you're going to be sharing a screen. If not, I'll show your web page.
Okay.
Hi, Demelza.
Hi, thanks for having me on.
Oh, really a pleasure and an honor to meet somebody that would pursue a PhD in crypto. So are you going to be sharing a screen, or I'm just going to be talking to you? Because I could
Let's see.
show something.
We can look at, yeah, I can share my screen. Also, I can do
Yeah.
webcam.
Well, you're on the webcam. So screen share is a drop-down menu, and there we go. So we see your crypto research report.
Great.
Beautiful. All right, Demelza. So, you know, give me a chart and I could trade anything. Okay, even crypto, because I'm patterns. It doesn't matter. Only the title changes for me. So this really isn't my bailiwick, but I do have friends. A good friend of mine, Scott, who was an early adopter of Bitcoin and also a Bitcoin miner, helped me out a little bit so I could ask some questions of people that are truly deeply involved in crypto. I'd like to start off with, in your endeavor in education, what attracted you and drew you to wanting to specialize in this area so that your handle says it all at Crypto PhD?
Well, actually, it's that's the reason I actually moved to Liechtenstein as well and got into crypto. Basically, my family raised me on the ideas of sound money. So I come from a long line of gold bugs, and when I grew up, of course, gold wasn't very useful for me. I can't use it to buy anything. It doesn't earn me a return. And when I found out about gold, Bitcoin, I thought, well, this is all of the properties of gold that I love. Plus, it's digital. It can travel with me, and it's mobile like I am. And for me, it was the perfect fit. That was in 2013, and I've basically spent every day since then learning more about this topic.
Okay, are you price sensitive to what happens in Bitcoin? I mean, we've had several parabolic moves over the course of its history, and then pretty good givebacks, about 70%, quite a few times, including from last year, 18,000 to about 3 in big round numbers. Are you one of those people that it doesn't matter, HODL, hold on for dear life, and you don't trade it? You don't trade it, and it's just a core holding, and perhaps the only time you use it is in transactions?
Yeah, well, let's see. Good questions. I don't use it in transactions because then I'd have to recreate my position again. So I don't spend it. I do hoard it, and I do hodl. However, I do some trades in and out of Bitcoin if I think that the market is turning. So, for example, like you said, we have had 3 bear markets in Bitcoin with losses of over 80% in the past decade. And during those times, it is convenient to go into a stable coin that is pegged to the dollar or into a stable coin that's pegged to gold so that you can retain value during the bear market.
Oh, interesting. So you don't have to liquidate, or you could just move to a coin that's going to hold up better than Bitcoin. So, that brings me to a tagline that you had in your last report. Only when the tide goes out do you discover who's been swimming naked. So who's not wearing their bathing suit out there in this altcoin world? A lot of people, it was a mania, and the tide did go out when Bitcoin dropped from 18,000 to 3. So why don't we talk about what's held up and survived, and what was really just a promotional fad that raised money for people and really did not serve a purpose.
Yeah, good points. Good points. Well, definitely, I think one of the big fads that we saw get washed away in the last bear market was the fad of initial coin offerings. Okay. So this is basically the process of companies that think they can offer an improvement upon Bitcoin and they launch a new coin, and they sell those tokens to initial buyers in the same way that a underwriter would sell a new public offering to investors during an IPO. And then the coin is traded on a cryptocurrency exchange in the same way that eventually stocks get traded on secondary markets. And I think that at the time, everyone was really excited for this because the Bitcoin had had an unprecedented bull run of 1,700% return in 2017. And people were very excited, and they wanted to invest in the next Bitcoin. And I think that what we saw over the past, the last year during the shakedown, it was basically people were asking, wait, what am I actually getting if I buy this? What can I actually do with this digital token? What does it like? What is its purpose? What is its utility? And I think a lot of people were unable to answer that question. A lot of teams, development teams that released tokens, were unable to answer that question. And so now what we see in the market is we actually see a decoupling between Bitcoin and the altcoins, where if you track the entire market in US dollars, it's actually everything's green, everyone's going up, everyone's excited. But if you actually track the cryptocurrency market in terms of Bitcoin, you actually have losses in many of the altcoins right now, and Bitcoin is shooting way above the others. So we have this decoupling finally, where the altcoins are starting to get lose some of their support.
Okay, so the blue chips are Bitcoin, Litecoin, Ethereum, just to name a few. Let me ask you this. We've had a very nice rally from 3,200 up towards 8,000. Is this, in your view, I know it's a tough call, the beginning of another bull move in crypto, or just a bear market rally in your view?
Well, I think this is the beginning of a new bull market. There's two reasons for this. I mean, basically, we've had, a sustained increase in value since the trough in December of 3,125. We're up over 80% since then, and it's sustained. During that time, we've had lots of negative news come out, and I think there's two main reasons for this, causal reasons that are fundamental reasons for this increase. One is, of course, the Bitcoin halving will occur in 2020 in May, so this is less than a year from now. The reward that is released every 10 minutes by the network will drop by half.
Okay,
And
so
the second reason is
decreases the supply for novices. That's going to decrease the supply of Bitcoins by 50%, which, if you have the same demand, that should really drive price, right?
Exactly. If we just take supply and demand, basics of supply and demand, and we see that if we assume that ceteris paribus, the demand is constant, now the supply is halving, the inflation rate is halving, we should see an increase in price. And actually, if you look at the last two halvings, so this is the second time this has occurred. Originally, when Bitcoin was first minted in 2009 or mined in 2009, you had a release of about 50 Bitcoin every 10 minutes. In 2013, that dropped to 25, and then in it was the summer of 2016, it dropped to 12.5. And now next year, we're going to drop to 6.25 Bitcoins released every 10 minutes. So I would say that is one reason that Bitcoin and Litecoin are performing very well, because the Litecoin halving is actually going to be this year in August.
Okay. In your report, you noted investment strategies that combine gold and crypto. You mentioned it just a little while ago. What are the top three that you've uncovered? Any of those in South Korea? And what about Samsung? This comes from Scott.
Okay. Well, thank you very much for the question. The question is, what is the main strategy for combining Bitcoin and gold? Or
what are your top three that you've uncovered for that strategy that combines gold and crypto?
Oh, do you mean this might be
top three coins?
Top three coins that combine gold and crypto. Okay. Yeah. Well, basically, I have to start out right away. I'm quite skeptical. the largest one right now is the DigX DAO. So this is the DigX DAO gold-backed stablecoin, and I think that they offer some interesting features. Let's see. One of the ones that I also like is Xarum. It's XAURUM. This one is also very interesting. I think this is coming out of Croatia, if I'm not mistaken, but it's also very interesting. Let's see. We have DigX DAO. We have Xarum. And Mark, is there a third stablecoin that we're looking at for gold? Which one?
Voltoro is not true.
Voltoro. Voltoro is also interesting. It's an Australian, but he's living in Germany, I think.
Okay.
Voltoro is probably the third one. But we've researched this quite heavily now at Incrementum because we have a background in gold from writing the In Gold We Trust report for the past 12 years. And the reason I'm skeptical is because basically, you know, the idea of Bitcoin is to not have to trust a counterparty. Now we're having to trust a counterparty to store the gold for us. And there's a lot of risks associated with that. So with these tokens, you need to be able to protect your private keys. So, you know, it's kind of like a more expensive version of an ETF with the risks that your private keys are going to be hacked. So I think we still need to see some progress in this area before it garners widespread adoption.
Okay. Speaking about market participants, Fidelity Investments started a storage of Bitcoin. Have you heard about that? Their planned projects? Fidelity being a, you know, kind of a mainstream investment house coming into the storage part of crypto. Have you heard about that and what it means for this asset class?
No, definitely. I'm actually quite well connected to Fidelity. I have a very good friend there who's working on the digital assets side, who's working on the custodian side, who's one of the decision makers at Fidelity, and I've been very involved, very involved with them, following them, and yeah, it's very exciting news what they're doing. I mean, they're working on custodianship of cryptocurrencies, mainly Bitcoin. And they're also, because they're investing so heavily in Bitcoin infrastructure, they're also considering actually becoming a miner for Bitcoin, which would be a huge move, given that most of the mining, most of the security is coming out of Asia and
Okay.
the U.S. I think that this would be a huge move if the U.S. starts to secure Bitcoin as well.
Okay, and you also mentioned in your report stablecoin project and Swiss crypto vault. Are those pet projects of yours, and any news on those fronts?
So Swiss Crypto Vault I'm not associated with. Basically, the report, what we do is it's kind of like a consumer advisory report. We actually dig into some of the firms that are based in Crypto Valley and based in the DACH region, so the German-speaking regions, and in Europe in general.
Where is Crypto Valley, Demelza?
So Crypto Valley is in Zug, which is a town known for cherry production traditionally. It's in the Swiss Alps.
Interesting.
And I'm actually from the U.S. originally, but I moved here several years ago to basically do regulatory arbitrage, and now I follow the scene here and try to provide some content for people that are interested in who's behind these firms. Are they doing stuff that's above board, or are they doing kind of weird stuff? And one of the things that we're doing right now is we're doing a report on stable coins. A Swiss Crypto Vault is one of the coins that we are looking into. It's a Swiss, basically a stable coin cryptocurrency that's backed by Swiss francs. And okay. I'm not associated with the project. We're just investigating it, basically.
Okay. Well, as we know, the ultimate perception, price is the ultimate perception of market participants. Has Bitcoin's purpose changed over time, or does it still give financial sovereignty to the smallest of minorities? And do you think that will change with a Fedcoin? So that's a big discussion that governments and nations will adopt their own. So do you see that coming? And has Bitcoin's purpose changed over time, or does it still maintain the integrity of its initial mission?
Oh, great questions. Yeah, I actually gave a talk at the Cleveland Fed last summer about this topic, and there were several presentations by Federal Reserve members about Fedcoin and how that would work. Of course, this is definitely in the research stage, and they have 4-year and 5-year and 10-year plans for this, and there's nothing certain. The U.S. is actually probably going, they have different, each regulatory agency in the U.S. is releasing different guidelines, sometimes contradictory. We had Congressman Sherman this week requesting for a bill to ban all Bitcoin and cryptocurrency purchases by U.S. citizens because it questions the power of the dollar.
Yeah, hegemony. Yeah, big challenge. Yeah, go
The
ahead.
hegemony of the dollar, exactly. On the other hand, we've had regulations by FinCEN coming out this month that gave guidelines on to how cryptocurrency wallets and custodians and everybody should behave. So it seems like they're somehow trying to accept them within the regulatory framework in the U.S. I think overall, Europe is actually looking more east than west right now because of the regulations in the U.S. and the uncertainty there. But overall,
oh yeah, we had the Baton Death March of foreign exchange brokers here after Dodd-Frank, Demelza. Yeah, a lot of people have left the U.S. because it's just too expensive to do business here.
Exactly, and that is a very good point. I think that is one reason, I really support Fidelity because they're probably the only ones that can afford the compliance cost of actually doing a large scale cryptocurrency product in the US. Any small firm will not be able to afford that, in my opinion. But going back to the integrity of Bitcoin's initial goal to make, give individuals sovereignty, I think that has not changed at all. I think originally the idea was to create a digital cash, and a lot of people say that Bitcoin is more like a digital gold and it's too expensive to use in daily transactions, and I do have to agree with that. However, I take a little bit of a different opinion on this. I think that if you look at, for example, the US, they have like 5 times the retail space than the next country that has the next largest retail space. And whenever I'm in the US, there might be one shopping mall that's has the glitter and gold, but all the other ones are, empty, and
Yeah.
most of the stores are closing up. And actually, I think that
they've been Amazoned.
yeah, they've been Amazoned, and I also think that, well, people are running out of money because they lost the purchasing power over the past 100 years. But also,
Okay.
I think that what we have is I don't think we would actually be buying coffees every day at the gas station if we had a deflationary currency like gold backing our monetary system. I think we're incentivized to spend tons of money on little products here and there because we have inflationary money. So I think that actually a system that would be based on Bitcoin would be deflationary in nature, and people wouldn't actually want to be purchasing these little consumption goods here and there because it would directly take away from their net asset wealth.
Okay, yeah, I've heard that a lot of adopters and people, they really they consider a deflationary environment. They want to hold their Bitcoin and not use their cash. So we've had a test case for this going on, and you mentioned Sweden and their e-krona. Is this really a major test case for a cashless society? And do you envision it would be that way? For example, in India would have been a perfect test case when they outlawed certain denominations of the rupee. So is Sweden the test case with e-krona for having a totally cashless society?
Yes, I do think we're going in that direction. In Europe, at the European Union level, at the Eurozone level, they would like to have complete transparency of all transactions so that they can stop any illicit transactions or any tax evasion. However, I think that more kind of entrepreneurial central banks, so smaller central banks, ones that are looking to grow their net reserves, I think that they're actually going to be more likely to challenge this influence from the US and from the Eurozone, from the European Central Bank. And I think that there's going to be some entrepreneurial, clever central banks that actually, adapt to to the consumer demand for a better money, a better currency. And I think that there's going to be some more competition between central banks. Some probably will offer just cryptocurrency versions of the current monetary policies, but I think that other central banks will actually improve the offering of their money. So, for example, the Swiss National Bank, they could hypothetically offer a monetary policy that's different from the Swedish krona and attract, if their monetary policy is more desirable, they could attract global demand for their money.
Wow. So, this is a brave new world to me. And, a lot of people have to educate themselves on this, especially, Demelza, to me, a wallet is made out of leather. Okay. So definitely a new age. So how does a 4-year cycle in blocks affect Bitcoin's monetary policy you envision in that future society? So I didn't even know there was a 4-year cycle in blockchain, but maybe you could speak to that.
Sure. I mean, this is a topic of huge concern within the community. There's different coins that have different monetary policies, and they're trying to figure out the best one. Each one is an experiment, and Bitcoin's experiment, like you said, was to have a 4-year cycle. Every 4 years, the inflation rate drops in half, and over time, basically the inflation rate becomes zero. So the flow will become effectively zero compared to the stock of Bitcoin that are in circulation already. And I mean, this is very interesting because what secures the cryptocurrency network, what secures the Bitcoin network, is actually miners that are paid fees for validating transactions. So I know this sounds quite complicated, but effectively these miners that hold a copy of the database of everyone's account history, account records. So let's just imagine that, if all of us shared a Excel spreadsheet that showed every single Wells Fargo transaction and every single balance in each person's Wells Fargo account, well, each of us would need to be incentivized to update our spreadsheet in an honest way so that we don't just add dollars to our Wells Fargo accounts and print digital money, and so that we can actually confirm all the new transactions that are occurring every day. Well, each of us would need to be incentivized monetarily in an honest way in this kind of open source database approach to money. And the fees for the miners basically drop in half every 4 years, which means that over time there's less and less financial incentive for these miners to act in an honest way for securing the network. And this is definitely a big concern because that is the only value that there is here. The minute that the network is not secure anymore, that anyone can just print double, they can just basically double spend transactions or print Bitcoin, and then the network is worthless, basically. So, or I mean, not worthless, but it's effectively the same as the current system we have.
Okay, so it would lose its integrity that it was set up to maintain, if that
exactly
happened. Okay.
The units would no longer be scarce at that point, and
okay.
And nobody could trust anyone anymore. So instead, the creator of Bitcoin, what he realized was that, of course, this inflation rate would be decreasing over time. However, we also have to pay a little transaction fee to send each transaction. And what you can think of this as is basically currently right now, miners get the majority of their income from the newly minted coins that are released into the Bitcoin blockchain every 10 minutes. And what you can think of this is that this is inflation effectively, and that means that the people that are holding Bitcoin are actually subsidizing the people that are using the network. So this is a little bit complicated, but let me try to repeat that. The people that are holding Bitcoin, they are actually losing purchasing power over time because of this inflation rate. And they're subsidizing the users of the network that are sending transactions that do not actually have to pay that much to use the network.
Interesting. Okay. All right.
However,
I'll have to listen to the recording here, Demelza,
okay.
to grasp it all. I want to ask you about Jamie Dimon. Okay,
Okay.
so we all know Jamie Dimon, you know, he's changed his mind, said it was really, you know, I don't know if he used the word fraud or bubble, but then JP Morgan set up a trading desk for crypto at the same time. So my friend Scott asked, what's the chance that Jamie Dimon takes a shot at cornering the Ripple market with the bank's money transfer business? Do you envision any MA in this space?
Wow, good question. I mean, for me, that would be Ripple's only exit strategy. I mean, that would be Ripple's only way to survive the future because, you know, I mean, I always thought that if the idea behind Ripple is good, then of course the banks will not just buy XRP off of the market in order to use that. They'll just create their own token where they're the main shareholders, not somebody else. And I think that's exactly what JP Morgan did. And so, I mean, possibly there could be a buyout, but I actually think that it's not necessary. JP Morgan can just create their own product because actually, I mean, XRP is unstable. The price is unstable. The volatility is unstable. And if you have to pay transaction fees with XRP, then you're going to be paying transaction fees in a volatile currency. So I think that actually JP Morgan, if they have clever mechanism design and game theorist on their staff, actually I think they could create a product that's probably even better than XRapid.
Okay, Demelza, for people like me that are, you know, have been traders of currency, etc., and that really want to delve into this and learn about it, but you know, consider me a novice in this. What would be the best way for me to go about educating myself so that when I put money on the line, I really know what I'm doing? Besides reading your reports, any primers that you could recommend to people about crypto so that they could edify themselves before they take risk?
That's a good question. There was a good book that came out. Oops, gosh. Chris Bernstein. Bitcoin book.
This is the
I'll
author.
have to send it to you.
Okay.
Yeah, it was sorry, there was a book. This one.
There you go.
This one I'd say it's a pretty good. So Chris Bernetsky is some kind of asset manager. He's a fund manager, and they wrote this book, Crypto Assets: The Innovative Investor's Guide to Bitcoin and Beyond.
Yeah.
So they're very good. This is a good introduction, and then of course also the report that I write and the team that I work with here. Anybody can find the report at cryptoresearch.report. So that's the URL, and it's got pretty good. I mean, it's not for beginners, but it's for laymen. So we explain every topic in a way that anyone could understand, and we're always happy to take any questions on any content in there.
Well, you know, Demelza, I really want to thank you for being here today, and I hope your subscriber base increases parabolically like Bitcoin did last year. It really was great to meet you, and you're now my trading warrior sister, like it or not, even though you don't trade, but you at times move out of crypto, and I really want to thank you for sharing your time and edifying our community today, and wish you in this new frontier all the success in the world.
Dale, thank you so much for having me on.
It was our pleasure, and keep in touch, Demelza. You're my go-to person on crypto now.
Wow, love the title. Thank you, Dale.
All right, so everyone, thank Demelza. Any last questions? Tom Lano says, great interview, coach. Scott Henderson, Scott's the one who prepared the questions for me, thank you, Scott. And Kareem, thanks you. We have part of our population that's very much involved in crypto. So this was a great interview. And I want to thank you once again. Alina says great interviews. So people can follow you on Twitter at CryptoPhD. And is there a subscription fee for your research, Demelza?
Nope, it's always free and it's available in English and German.
Okay, well, I know a lot of people whose favorite thing to say is, if it's free, it's me. So once again, I think that we found a great resource. Scott, in fact, recommended that I interview you, and appreciate you being with us. Remember, don't just count your pips or cryptos, count your blessings. That's a wrap for us today. And thank you very much, Demelza. And keep in
Thanks.
touch with me. I'd love to have you back.
All right. Have a great day.
Thank you. All right, everyone, that's a wrap. See everyone tomorrow. Good hunting the rest of the day. Adios.